Hello, everyone, and thank you for joining the HVAC Mergers and Acquisition podcast. On this podcast, we're talking about how to prepare your HVAC company to get the best price and best terms when you sell, how to acquire HVAC companies, and how to merge HVAC companies together. So, very excited for this next episode. Today, we're going to talk about the value of seller financing your business. And that may be a new term to you, but basically, it's where you act as the bank when selling your company, right? And if you understand banks, right, and banking systems, banks can do pretty well for themselves, right? They have interest rates. They have basically they kind of hold all the cards, right? They're in complete control, and you can do the same thing when selling your company. You can actually be the bank. So instead of a buyer going and getting SBA funding or financing from somebody else, why not you finance the business? And so not only can you get paid the market value for your price, but because you're being a little bit flexible on the terms and you're getting paid over time for your business, you can get a better valuation for your company. And on top of that, you can add an interest payment to your business. And you can structure that to where basically you get paid as long as you want, right? It just depends on whatever you value the company at. And so that's some value of having some flexibility on the terms when selling your company is you can maximize the total sales price. And when you're willing to do that, you'll find that the buyer it can typically be a lot more flexible on that as well. Now, obviously, you want to have a really good mergers and acquisition attorney to represent you and make sure you have the proper language in place to where you're protected. But ultimately, you can get a much better valuation for your business, and on top of that, you can get interest payments paid as well. And then, if it stretches out too far, and let's say you're later in your career, and you're worried about, wait a minute, maybe I don't need the money right now, but having this regular income coming in is nice, but it looks like it stretches out a little bit too far. We can actually have that put in a trust for your family, right? Or for anybody, right? So you can make sure you get the proper legal documentation up front, but have that those dollars set aside and create that additional wealth for your family as well. This is not investment advice. This is not tax advice. So this is just based on experience. And yeah, so this is a way to structure your business, and you'll find a lot of times it can sell a lot faster, because if you think about the process and working with some of the financial institutions, it's a long and tedious process, especially in 2024. Getting financing, getting loans is a very cumbersome process if you get financing at all, because or sorry, if the buyer gets financing. Now there are private equity groups that have capital ready to deploy, but not every business will qualify for that type of investor. So in those types of cases, it helps to be a little bit flexible. So hopefully you found that helpful. Hopefully that makes sense. If not, feel free to reach out to my team at scaleorexit.com, and we're happy to support you in preparing to sell your company or connecting you to investors. Stay tuned for future episodes.